it's important to have this kind of relentless enthusiasm towards the business, but also have that tied to a real actual goal that indicates health in the business. Half the battle is your mindset as the founder and as the business owner. If you look at your job as I just do this one task, then you might lose your job. But if you look at your job as I'm responsible for all of these things, there's going to be some tasks that you're not going to do anymore. But that's going to mean it's going to free you up to do other higher leverage things.
What one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
Having a mindset of constructive dissatisfaction.
Hey, and welcome to another episode of the Business Growth Show. I'm your host, Athin Cassiotis, and today I have a powerful guest. His name is Brian Clayton, and he started mowing lawns as a teenager with a push mower, and 20 years later, he's the CEO of GreenPal, the app Entrepreneur Magazine calls the Uber for lawn care. And before GreenPal, Brian built one of Tennessee's largest landscaping companies, growing it to over $10 million a year before selling it. Now he's doing it again, this time with technology. GreenPal connects 300,000 homeowners with reliable lawn pros, handling thousands of jobs every day all over the US. And Brian's on a mission to bring AI into one of the oldest industries out there, helping small lawn care businesses use data and automation to compete like big companies. Welcome, Brian. Thank you for being on the Business Growth Show.
Athin, it's great to be here. Thanks for having me on.
Yeah, you're welcome, mate. I'm sure it's going to be a very impactful episode for everyone watching and listening today. And you are a successful entrepreneur. So for those people who don't know who you are, just introduce yourself by telling us a little bit more about you and your journey.
Yeah, so I've never had a job. I've never worked for anybody, and I guess I'm lucky in that way. My dad made me go mow the neighbor's yard one day when I was a teenager. I think he got tired of watching me play Nintendo all day and made me go cut the neighbor's grass. I got paid $20 for like an hour of work. And I thought, this is awesome. I'm just going to do more of this, and started passing out flyers and built a little lawn mowing business while going to school and kept with it. I stuck with that grass cutting business all through high school, all through college. A lot of people tell me, yeah, my first business was a lawn mowing business. And they tell me about how they learned about getting a business started in the grass cutting industry. And everybody, a lot of people have that kind of entry point into business ownership, cutting grass. And I kind of just stuck with it. I didn't hang it up when I graduated college. I decided, okay, well, I'm going to take a pay cut if I go get a job and not run this little business anymore. So let's see how far I can take it. And I ended up growing it to an 8-figure company and 150 employees. That took about 10 years. And then I guess year 13, I kind of had plateaued from a personal growth journey. And I thought, I'm going to try to sell this business. I'm going to try to see if I can get it acquired. And that took 2 years. Took 2 years to find somebody to buy the business, but ultimately got it acquired by a big national company in the United States. And then after that, I took about a year off. Didn't really know what I wanted to do next, but I knew I wanted to start another company. And at the time, Uber was kind of taking over the world. And I thought, well, if they can do that for ride sharing, then why can't I build something similar for grass cutting? And it was kind of like naivete as an asset. I didn't know how hard it was going to be to start a tech company, but I didn't let that stop me. And my two co-founders and I started working on the idea, the Uber for lawn care. And now GreenPal is a 10-year overnight success in the United States, around 300,000 people using it every week to get their grass cut. So that's my story. 25 years in one industry, almost 30 years in one industry, in the blue collar side, and now the tech side.
Yeah, awesome, man. What a story. And I love this. I can, agree. I started selling VCD movies like with CD burners back in the day when I was at high school. So I love the little, the hustle when we're young, right, of making money. And, but what on for you for sticking at it? I think that's, a big trait, right, that a lot of people need to understand is that there's a commitment element, right, and building momentum. So well done for doing that. And then, growing it to something massive, to an 8-figure business, selling it, which is awesome. It's an awesome feat there. That's a challenging task. And then going, what I want to do next. and then building something. And I love the thing you mentioned there. It was a 10-year overnight success on that side. So it's awesome because a lot of people don't like, they see the end result, right? Like, oh yeah, it just happened. You were lucky, or this thing just happened overnight. They don't understand the years of sweat and time and money and everything that put into it. And now you've obviously got it's like a $30 million year, tech platform, right? That you've built over that period of time. So I think that's yeah, so powerful, right? On that. So I guess we've got different people listening here today, right? From early stage people that are maybe wanting to start businesses at early stages to people wanting to go and grow their business, or even shift and pivot, and maybe they want to create a tech business, right? As well here. I think that's a very powerful thing. So I think mindset's a big part, right, of this, because in anything in business, right, like we've got to keep improving our mindset. There's things that hold us back. So what do you think was one of the hardest mindset shifts, going from more of the blue collar type area to more, to the tech entrepreneur of what you've built yourself into today?
Yeah, I think mindset is a big part of it. Whether you're starting a traditional, simple business like a grass cutting company or a home cleaning business, or just the simplest business, all the way up to running like a tech platform with thousands of users in and out of it every minute of every day. I think half the battle is your mindset as the founder and as the business owner, as the entrepreneur, to be just relentless about always improving it every single day and inching it one step closer to some kind of meaningful, active goal. And not getting caught up in like all of this fake work that's easy to get sidetracked by, and really driving towards a goal that means you're making progress. And for us with GreenPal, the first 5 years were excruciating, trying to will this business into existence. And how we got through that is we dialed it back down to a one number, one metric, one goal, which was the number of transactions per week. How many transactions did the platform facilitate on a weekly basis? And our first goal for that number was 100. I wanted 100 people to use this thing in a 7-day period of time. And that took a little over a year to achieve. So here, I went from running this $10 million landscaping business that I had built over 15 years, sold it, and then now I kind of started all over again. I was begging people to use this like crappy app that I built for a $27 lawn mowing. And I just wanted 100 of them. And it took over a year to achieve that goal. But when we got that goal done, we celebrated it like it was a million, because I knew if I could get to 100, I could get it to 1,000. If I could get it to 1,000, I could get it to 10,000. And that's how it unfolded. We just kept moving that number up and setting that goal, and just focusing all of our intensity on hitting that number. So I think it's important to have this kind of relentless enthusiasm towards the business, but also have that tied to a real, actual goal that indicates health in the business, and that is tied to something real. Whereas a lot of founders will get hung up on vague vanity metrics that don't really matter, and really a lot of times it ties back to sales, people that are buying whatever it is you're selling and coming back, and making that number small, and then growing it, and before you know it, compounding starts to take place, and that number gets to be big. And that's how it was for building my first business, and that's how it was building GreenPal.
Yeah, awesome. I love that. And I love that how you said half the battle is mindset, which I completely agree. It's like the business only normally grows to the level of the business owner, right? So if you don't keep pushing yourself, like you said, you're going to get capped. So it's just like yeah, having that growth mindset, which is amazing. And I love that you drilled it down to that one number. What's the one thing? You go, this is what we need to hit, and then our growth is going to be this. So it simplifies it, right? Because you can do 100 things, but if you just focus on one key thing, then what is all the metrics? Then you work backwards from there, right? Of what's going to get you that number. So I think that was really, really powerful. I'm intrigued because at the start, right? Like you've obviously gone from a very successful business, you sold it, you had that year off, and then you've gone into the tech space. Now, to me, it's like, who are the people around you, right? Or like that to help you to do that. Because you've got potential business partners that you could look at here. You've got, key team members, you've got maybe coaches, mentors, advisors, that can help you to get to that point. So what were your thoughts when you were going into this new space in tech, and who did you sort of have as part of your team, to help you get it off the ground?
Yeah, it's a really good question because bad co-founder dynamics sink a lot of businesses. So my advice, having gone through it with my first business and my second company, GreenPal, was I got extremely lucky in my second business, uh, with my co-founders. We had four at the outset. One of them didn't work out, and so now there's three of us. And looking back, I didn't really approach it the right way. I told a few friends about the idea. They said, "Well, I'll start that business with you," and we just started it. And ideally, you should be looking for people that complement your skill sets, and you should be looking for your business soulmate, the person you couldn't imagine running the business without. And there's a couple of like little tests that I like to think about, that if I had to do it all over again. The first is would you write this person who you're thinking about starting the business with a check for $10 million to start the business with you? And if you had, and you might say, well, I don't have $10 million. Well, if you did, would you, if let's say you had 10 million in the bank, would you strike them a check for that 10 million to go start the business? And you might say, well, no. Well, if you're going to say no to that question, then the answer is that's not the co-founder you need to start the business with. Because if the business is successful, within 3 years, 5 years, their slice of equity will be worth $10 million or more. So just fast forward that to today, and are they that instrumental, that valuable, that you would cut that check? So that's a mental exercise I like to go through. And you really only get one shot at getting this answer right. It's kind of like baking a cake. And if you forget like an ingredient while baking a cake, like you forget the flour or the sugar, you can't bake the cake and then come back and add the sugar in later. It doesn't work that way. You have to get it right at the outset. And if you pick the wrong co-founders, it's just gonna determine whether the business is successful or not. And so I got extremely lucky, but I recommend, especially nowadays, most co-founders just go it alone until you possibly can't go alone any further. And nowadays, with all of the AI tools we have at our disposal, we're starting to see this already. The $100 million, the $1 billion solo founder, who not only doesn't have co-founders, doesn't have hardly any employees either. And so I recommend go it alone, de-risk it as far as you can. And then if that business soulmate comes along, your Steve Wozniak to your Steve Jobs, then go all in and start the business with them. But most of the time, that's not the case. Most of the time, people seek out a co-founder as like a coping mechanism. Like, oh, this sucks. I don't want to do this by myself. Let me get somebody else to like suffer with me. And that's not a recipe for a successful business partnership.
Yeah, I love that. So powerful. I love that that test and finding the business soulmate. I've definitely tested some business partnerships and had some challenges with not so good business partners. And I think I had to learn it, right? Like, I think it's like you don't necessarily know what you don't want until you don't have, you get it. And then you're like, okay, now I know, like, how do I do it properly? Like you said. So I think, a very big test for everyone, because yes, it can create a big problem later if you don't do the work up front. And it's not just about having a founder agreement or a shareholders agreement. It's about getting the right person in there with you that's going to really, be that soulmate, like you said. So I think that was amazing. I know that you bootstrapped GreenPal, right? Instead of raising venture capital, which a lot of people might do at the start, especially for a tech business. So what's the reason behind that?
Yeah, when we first started GreenPal, we thought, oh, we're just going to do, the same thing that all these Silicon Valley companies do. We'll raise a round of angel funding, and then we'll raise a Series A, B, and so on. And we started to do that, and I remember like it was like the first 6 months of the business, we had to do all of these things. We had to build a product and pass out door hangers to try to get people to use this app. And there was just a million things that were wrong with the app. And we kind of had to like focus on which ones to fix and make better. And then on top of all of that, I was supposed to go around raising money. And I remember taking like some initial angel investor meetings, and I was just running around grabbing coffees all over town. And I thought, man, I'm wasting my time. Like I am taking these meetings trying to get a $50,000 check if I'm lucky, and I just need to like focus on building a business that makes $50,000 a week, and just we print a seed round every month. Let's just do that. And so that's what we did. We hunkered down, and my two co-founders actually kept their day jobs, and so we worked nights and weekends on the project for 2 years, and had a crummy office with no windows, and some days slept in it, and share, my co-founders had roommates, and we just had a really lean personal burn rate. We were cockroaches. We could survive on very little, and you couldn't kill us. And so that's how we got through the first 2 or 3 years without outside funding, and slowly built a business that made money. And then we could take that money and reinvest it, and build out the team around us so we can move quicker. And it turns out that was the right call for that specific kind of company at that moment in time, because there was a lot of other companies that were also doing the Uber of whatever, Uber of laundry service, Uber of home cleaning. There were a lot of other Uber for lawn care ideas as well that all crashed and burned because they raised a bunch of money, and like they drove off the cliff and didn't leave any skid marks. And I heard this put the other day. I think Mark Andreessen was saying it. He said that more companies die from indigestion than they do starvation. And so what he meant by that was more companies are ruined by raising a bunch of capital, and then that enables them to do a bunch of sloppy things other than focusing on their customer. And they die from indigestion and not starvation, which is just not having enough money. If you're sufficiently like dedicated and willing to make the sacrifices, you'll figure out a way to not starve to death. And you'll get a crappy apartment. You'll get a crappy apartment. You'll get a crappy office. You'll drive for DoorDash and Uber to make more money to sustain yourself while you're growing your business. So you won't die from starvation, but you can die from indigestion, meaning you raise a bunch of money, you piss it all away. Now your investors are mad, your cap table's all screwed up, your co-founders don't see an end in sight, their equity is not worth what they thought it was, early employees, same thing. And then next thing you know, like you've got one shot left to get to the next round of funding, and you don't hit it. And now you're underwater, and like everybody just quits. So that's like a cautionary tale for anybody that's thinking about raising outside capital. It very much forces you into this like get rich or die trying outcome. And if you don't knock it out of the park, to use an American baseball metaphor, if you don't swing and knock it out of the park the first couple of pitches, it's game over. And I just didn't really want to sign up for that journey.
Yeah. No, it's awesome, man. I think it's it's a realization, right? Especially the old school way of doing things from a while ago where, yeah, it takes a while and it takes a lot of money. And if you're not hitting those goals, then you can get out of it. And I think you've really been a testament to grinding, right? Like I remember that when I started my first business, it was the same thing, right? I did the really risky thing. I quit my job and started my business the next day, no traction, right? So it was like,
Nice.
I put myself in the deep end on purpose because I was like, I'm going to make it happen. Like you said, I did Uber for a couple of months, just a little bit at the start to go, you know what? I'll just, because cash flow was up and down, right? And this is many years ago now, but it was like you said, you do what you have to do. If you have to live in a place that's older, you do what you got to do. Whatever, make it happen. And I think there's this perception of like I have to look like I'm doing amazing stuff, but if you do those hard things and you live below your means or whatever it is for a period of time, you're likely going to create something much bigger down the line when you get through it, and most people haven't. So I think, yeah, so powerful on what you just shared there, with that. And it's interesting now these days, right? Because I'd love to know your thoughts, because AI, we can talk about that as well, is changing the game, and even like coding and tech is becoming a lot easier, right? Now, so you don't really need to go out and raise huge amounts of money and hire 10 plus developers and things like this, right? To create a tech business is actually changing a lot now with what you can build. So I think the technology is very interesting on that side of things. So I guess if let's talk more around the lawn care side specifically more now, or what you're doing, right? So I guess, are people going to rock up? There's, the weather becomes into it, right? There's all these challenges with reliability. Are they going to actually do what they say they're going to do, and everything like that? So how did you sort of solve that problem with what you were doing?
Oh man, that was one of the first things that smacked me in the face when I built the company. When my co-founders and I started building it, was you think that you're getting into the technology business and that all of these things kind of abstract away. And because I had just built and sold a landscaping company. I didn't want to do another landscaping company. And so I thought I'll get into the tech business because we'll just be writing code and engineers, and we won't have to deal with all of these pesky things that are related to the lawn mowing business. And after about the first 6 months of building GreenPal, we had 50 people a week use it, and we would piss off 49 of them. And I thought, man, it's becoming really clear that everything that sucks about getting a lawn mowing service is now my problem, and I have to solve those things. And as it turns out, there's like 1,000 things that can go wrong between you having grass that's 4 feet tall and somebody coming out and getting that under control. And so it's the platform's job, it's the app's job to solve every single one of those things and prevent them from not happening, and managing expectations along the way, and creating an environment where buyers and sellers can meet and do business in a smoother, more seamless way than they could the old way. And so that was one of the first things that caught me by surprise. And it kind of makes sense because, like, when you get a room in an Airbnb or rent a home in an Airbnb, you don't really care anything about how smooth Airbnb's technology works, or how slick the app is designed, or how beautiful and elegant the homepage was, or how fast the app loaded on your phone. You don't care about any of that. All you care about is the host going to be there to open it up when I arrive? Are the bed sheets clean? Is it clean? And does it look like it did in the photos? That's all you care about. You don't care about any of that other stuff. And so when you're starting a tech company, it's easy to kind of get lost in the technology side of it and forget like the customer experience side of it and what really matters. And so that was like the lesson that I learned the first year of starting GreenPal, was that it doesn't matter how good our technology is. The user only cares about, did the lawn mowing service show up on the day they were supposed to show up? Did they do a good job? And did they follow the process? And did it work? That's it. And when we started it, that stuff worked maybe 10% of the time. And we had to kind of get into the psychology and the user motivations on both sides of the transaction, figure out why these things were breaking down. Why didn't the lawn guy show up? Why did he ghost the homeowner? Why did he show up but not do the backyard? Or why did he change his price when he said he would do it for 50 and now he wants 75? All of these things that go wrong with hiring a lawn mowing service, we had to figure out how to prevent and put in the safeguards and fix once they do go sideways. And in the early days, it was very much phone calls, spreadsheets, text messages, emails, to-do lists, stuff on the whiteboard, kind of like the Wizard of Oz behind the curtain, just making the magic happen. And then little by little, we would build in systems, processes to deal with these things. And now, with thousands of transactions every hour, we handle these things programmatically, and we handle them with data, and we prevent them from going off the rails, and we predict negative outcomes and predict them and prevent them from happening. But it started off very much in a hand-to-hand combat manual way. And I think that's how you should build any business. You should nail it, then try to build the systems and scale it.
Yeah, no, awesome. It's funny, isn't it? Where the industry problems are still there, right? It's just
Yeah,
probably
you'll
bigger.
never get away from that.
Yeah, that's right.
We will never get away. GreenPal will never get away from the case of the disappearing lawn guy, just like Airbnb will never get away from dirty sheets on the bed, or dust bunnies in the corner. They have had to build technology to prevent a dirty floor, and GreenPal has to do the same thing in the lawn mowing business.
Yeah, exactly. And I think this is obviously what's created your success, right? Because you're looking at all the pain points, all the problems that could happen, and going, how do we build something that prevents that where possible, right? Or manages the customer experience so it's not that
Totally.
bad. I think is probably a big one there, right? And yeah, like I'd love to know, yeah, your perspective on, let's talk a bit more on AI now, right? Because I know you're big on data and automations in what you're doing, and it's changing the game on how you're helping people. So, yeah, initially, like your thoughts and how you're, I guess, harnessing, with helping everyone, with what you're doing as well.
Yeah, AI has caused and enabled us to do things we never could do before. Um, and so everybody says AI is going to eviscerate white collar work, and it's gonna make all these jobs go away. I'm hiring more people than I ever have. I'm doing more work than I've ever done. My people are doing more work than they've ever done. Um, we're doing more things that we could not do before. And a lot of it is it's enabling us to do things that we just flat out could not execute on. I mean, I'm a decent founder. I'm a decent CEO, but nobody's going to give me the job to run Google or run OpenAI or run Facebook. I'm not at that level. And the same could probably be said for our engineers. Our engineers are really good, but none of them are getting $1 million offers to go work at a Google or a Facebook. So there's like that level that NFL level of what engineering and development looks like, or what an NFL CEO would look like, and then there's my team, and AI closes that gap by maybe even as much as 50%, to where now I'm able to execute at a level that I never could execute at before, from strategically thinking. Um, I have a running ChatGPT Pulse. They have a daily product called Pulse that coaches me on how to be a better CEO, coaches me on thinking ahead and thinking about more strategic initiatives that I never even would have thought about. And then being able to implement those things and build really complex machine learning and data modeling inside of GreenPal, where we can crunch the numbers on thousands of transactions happening every day, and better predict outcomes, and better satisfy users, and make lawn care services more money in doing it. These were things that we couldn't do 2 years ago. We just flat out didn't have the acumen to do it. And with AI, now we do. And what does that mean? It means we have happier customers. We have lawn care services using the platform, making more money. It also means we're doing more work. We're doing more work than we've ever had, and the business is growing faster. So I'm very optimistic for what AI is going to do for small business, medium business, and at some point big business. They will be the last to adopt it. But it has reinvigorated life into my company.
Yeah, I love it. So true. And I'm a big advocate of it as well. And, what I like to say people is, imagine you could make all of your team double as efficient, right? With AI, with what can be done. So then all of a sudden, it's not about getting rid of people or anything like that. It's like doubling or making the business a lot bigger, right? Into where you want to go without having necessarily to hire all these people. So it's not about taking jobs away. It's about how can we leverage everyone's time on that. And I love that you're saying that you're working more on it. So, and there's doing things that you didn't think you were doing. And I think that's the key thing that a lot of people don't understand. I like that Pulse example there, where it's like, you don't know what you don't know. So get people to help you, whether that's coaches, mentors, advisors, whether that's an AI prompting you.
Exactly. That's exactly right. It is in the background proactively helping me and proactively teeing up things I never thought about. And the end result is I'm doing more work than I ever have. And it's not about job loss. It's task loss. There's going to be a lot of task loss. And so if you look at your job as I just do this one task, then you might lose your job. But if you look at your job as I'm responsible for all of these things, and there's a bunch of tasks in there's going to be some tasks that you're not going to do anymore, but that's going to mean it's going to free you up to do other higher leverage things. So everybody really kind of needs to think of it that way, as task loss, not job loss.
Yeah, I love that, task loss. And yeah, and it's like, as the founder, you got to integrate it to yourself, you integrate it into your team, upskill your team on using it. I think, have that growth mindset of learning, I think is important. Because otherwise, yeah, you're going to be left behind, right, of other businesses that are doing it. So
exactly.
Yeah, no, that's awesome. I'm intrigued to know now, right? Because you're seeing the power of AI, right? Of how it's changed, especially the last couple of years. So, if you were going to bootstrap the company again, right? Like, but do it today with the technology that we have, what do you think you would do differently? I think it's an interesting question. Yeah.
Yeah, if I could do so, it's a weird thing. Like if I had to, because I just told you all the reasons why we didn't raise any funding, and that was the right call. That was the right call at the right time, because if we had $5 million given to us at the outset, we would have pissed it all away. So, and then we would have had a big crater in our business that we probably never would have climbed out of. But if like the guy from Back to the Future rolls up in the DeLorean and says, "Hey, we got to go back to 2015 and do this all over again," what are you going to do differently? The first thing is I would raise money. I would raise a bunch of money, because I could do in what took like 5 years, I could do in 5 months, because I know everything there is to do. I've been through it. And so I think if like it's your second or third lap on something and the path of like what you have to execute against, raising capital definitely can help you move quicker. So that's one, it's kind of weird dichotomy about looking at it from the rear view. But if I had to start the business all over again today, with all the new tools, all the information I have, I don't know that I would, because it's a different world. And a lot of times there is windows of opportunity to build certain kinds of businesses. So there was a window of opportunity to build a marketplace business in the United States in this industry from about 2013 to 2000, maybe 17, 18. And if you missed that window, you kind of missed it. Because other competitors were going to kind of stake their claim in the market and gobble up the market share, and it's going to be really hard to break into that. So I would not start this business again at this moment in time. Now I will start a different business. I think there's a lot of opportunity for founders to build processes to get in the trenches with blue collar businesses and implement AI in their daily life. I would probably do something around that. Maybe even in the lawn and landscaping industry, because I know it so well. But I would not start another marketplace business in 2026, because I believe the window has closed on that. Probably like the same that it has closed on starting a social media company. We're probably not going to see any new social media networks for a while. and maybe even crypto. We're probably not going to see any new crypto projects for a while. There was a window in which to do that. So looking back in the, from now doing it for 10 or 12 years, that's how I see it. Now that being said, it doesn't mean you missed all opportunity. It just means that there's certain ideas, certain types of businesses that have been built. And if you try to do that exact same thing in 2026, it's probably going to be a dead end.
Yeah, I love that. So many amazing points. And just like, if you're going to build an Uber today, you got almost no chance, right? Like,
You got no chance.
they got the market. So,
Yeah, that's right. Don't try to do that one. Try a different one. Try a new idea. And now with AI tools, you can quickly validate if something is a good idea or not. Whereas it used to take a year to figure out if something was a good idea. Now you could do it in a weekend. And so that's the advantage you have today versus what I had starting in 2014.
yeah, definitely. And I agree on the AI automation side. I think this is a big one for any business, right? To go in and help them, whether it's in blue collar or whatever industries that you understand. I think will be, yeah, a really powerful way that make businesses more efficient, like you've been talking about. So awesome. Love that, man. And I guess one thing I always like to ask is around failure, right? Because I think a lot of people talk about the good times and the exits and all these other things that you've built, but there's been a lot of challenges along the journey. Just so that people, I think we can learn a little bit more from failure. What was one of your biggest failures or something that you had to overcome, and what did you learn from that along that journey?
Yeah. Everybody says that you got to move fast and break things, and you got to go from failure to failure without a loss of enthusiasm, and those things are true. Bill Gates, he said that success is a lousy teacher, and that's true also. That you don't learn anything when things are going correctly, going right, going as planned. It's only when things are not going well do you learn something. And you really are using these failures as building blocks. So the goal is to avoid the risk of ruin. And I've had several of those in 30 years of business where it was like almost the end. And particularly in 2008, during the 2008 financial crisis in the United States, it almost sunk my company. And so that was a failure point where I screwed up several things that got us to a point of insolvency, had to fix all those things, and ended up 5 years later selling the company. So I think there some ways to frame failure is that it's never as bad as you think it is, and that in a weird way, 5 years from now, you'll be glad this is happening, because this will be the thing that is causing you to make changes and do things differently and improve things, and it's going to be ultimately the event that gets you across the finish line. So you'll be glad this happened. This is what I tell myself, even though I don't want a failure event, to come from my business. If it does, that's what I tell myself. The other thing is, because there's always some catastrophe that you don't know is around the corner, and you try to prepare for it, but there's always some kind of lawsuit or some kind of bad luck that happens in your business, and you just got to weather that storm. It's just going to happen. But the other thing about failure that helps me, there's a book called Extreme Ownership by this guy who was a former Navy SEAL named Jocko Wilkins, something like that. Anyway, the book is really about one thing, and it's about as a founder, as a team leader, as a Navy SEAL, everything is your fault. And if you can embrace the reality that everything is your fault as the founder, everything is your fault as the business owner, everything is your fault as the entrepreneur, it's almost liberating in a way, in a weird way. It's like, okay, I screwed something up. What did I do? Let me learn from that and not repeat it. And so that's how I look at failure, and really trying to put in place things to avoid the risk of ruin, and little failures along the way, learning from them to help make my business stronger, make me a better founder. That's how I look at it.
Yeah. Awesome. Love that. What a great story and way to think about it. I think that's the key part right here of the mindset that you have, looking at it, preventing that. And what a great book as well, for people as a resource to have a look at as well, to just reinforce that. So awesome. Yeah, Brian, thank you so much. It's been so powerful of what you share with us here today. And I guess as we're starting to wrap up, what one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
Uh, there's a lot of little kind of mantras that I try to run my business by, but one that I recently heard that I love is this notion of having a mindset of constructive dissatisfaction. And so the reason why that makes sense to me, why it stuck with me, was because if you really care about your business, you really care about it succeeding, you really care about your customers loving it, like you will be dissatisfied with it all the time. You will be pissed off about something all the time that needs to be fixed and improved. And you're kind of all over everything all the time. You're checking everything. You're using the you're using the product. You're you're upset when there's a negative review online about your business. You are all over everything all the time, and you are dissatisfied with several things going on in the business. But adding that one word, constructive dissatisfaction, it's like you're pissed off and dissatisfied, but you're doing something about it all the time. And you are always making this business better. You're always improving it. You're always making your customers happier. I think having that mindset of constructive dissatisfaction at every stage of the business is one that can help separate you from 90% of your competition.
I love that. That's so good. That reminds me of sport, actually, right? Where you're like, I can always improve every day, right? Like I'm never
Every day.
satisfied, never perfect, and you just keep moving forward, in that way as an elite mindset, right? Type of athlete as we are in a way as an entrepreneur. So I think that's a really awesome way that you've constructed that, in that constructed satisfaction. I think that's really powerful. So thanks for sharing. And we connected through our networks. I learned about your awesome journey from mowing lawns as a teenager with a push mower to now being the CEO of GreenPal. You're awesome guy, so knowledgeable. You shared so much gold with us here today of how to think about business, and what we need to watch out for. How can we grow to get ourselves to that level, which has been really, really powerful. And I'm sure you continue to help small lawn care businesses use data and automation to compete like big companies. And very grateful that we connected. Look forward to partnering with you as well. So, Brian, how can people find you and get in contact with you?
Well, thanks for having me on your show, Athin. I appreciate it. I enjoyed our conversation. Yeah, best way to find me is just Google my name, Brian Clayton. Maybe throw GreenPal on the end of it, and you'll find my LinkedIn, my Instagram. Those are good places to drop me a DM. And then anybody in the States, greenpal.com. We'll be in Australia and UK within a year or so. So hopefully next time I come on your show, we'll be talking about our launch into Australia.
Yeah, awesome. Well, definitely check out Brian there, those key social platforms, the website, for the US now, and look forward to hearing, coming to Australia and the UK. Love an international business. So looking forward to, seeing, being part of that and what you're going to bring and make that global impact. So, mate, it's been a pleasure interviewing you. Thanks for being on the Business Growth Show.
Thanks, Athin.
Thank you for watching and listening to the Business Growth Show, where we talk about everything on business growth. And please like, subscribe, and leave us a 5-star review. You can find me on LinkedIn, Facebook, Instagram, and YouTube as Athin Cassiotis, or visit my website, athincassiotis.com. And if you want to grow and scale your business, you can reach out to me on any platform to see if we're a good fit. So until next time, remember that our business grows where we learn skills and take action using them in spite of fear. So let's create wealth and freedom together.